Get ready. Here I come. So half session, um, not a lot of major movements, but I do want to talk about interest rates because I think this is going to be the linchpin for a lot of different markets, the dollar, gold, eventually equities. And since the Fed has eased and we've been at this 420 level, if you look left, you see how important it was to hold support, resistance. Look at all the tags here. And this has been a time correction. Okay. So it's corrected this rally off the last Fed ease. You notice that yields go up every time they ease. Maybe they'll go down if they stop easing. But to me, this technical formation isn't a question of if, but when we penetrate 440. And that's a 25 basis point move, 420, excuse me, 420, that will take it to 445 in a hurry. So then you have to ask yourself, and the long-term stuff still looks bad, TLT still looks bad, still working its way down to the 200-day moving average. Since that negative week a few weeks ago, all it's done is go sideways. As long as we're under this 90 level, the path of least resistance is down. So I think that there could be a little bit of a rout coming in the debt markets. Should probably keep an eye on junk as well. And, that's looking a little bit toppy here on the weekly. All right, this is private credit, the shadow banking system, junk bonds, high yielders, higher the yield, higher the risk. Daily's diverging too. This is where you'll see when HYG is heading down um, that the spreads blow out on different companies on their bonds. You have flight to quality, except governments. These actually look better than the sovereigns. Let's look at a 4 hour. Yeah, I wouldn't be long junk. So um, throw out the junk for 2026 too for higher yields because I know there's going to be a melt up, but you still could be in the wrong stuff and not participate when there is a melt up. So that's my take on interest rates. I think that they're going to be supportive. This move in rates is going to be supportive for the dollar, euro, rolling over quietly. This almost looks like a time correction too. But cable, that may have been it. And, Aussie was a strength and it's having a pretty negative day. And so with rates, again, the expectation, I didn't buy any this week, was that we were going to get another high in US dollar yen above this 157.80 level, this double top. So that should be, also part of the dollar rally. Then once we get up here and we take out these highs, then, we'll be on the lookout for non-confirmations and divergences to see if there's any kind of high or intervention that comes in here to stop this move that, some of the yen bears think US dollar yen could go to 200. Okay. So this is going to be a real important time frame going up into making new highs. We'll be stalking that. Gold, hard to believe, was less than a week ago that the sale at 45.35, that's $200. I hope you wrote it out better than me. We're at support, and you can see it pretty clearly here on the 4 hour. It was almost like the 420 level in the 10 year. But this is going to be, I believe, temporary support. So we take this out. That's how you could get 4,000, right? Because it's about a $200 move, $300 move from here to where we peaked. And there could still, I see two drives here. We could rally first before it breaks down as well, especially if the dollar wants to make one more trip down. but the dollar's still acting okay. Had a decent week. And remember, the key add-on level is going to be here at 98.70. I still think, let's see if the mags are bouncing back. Bitcoin still, um, I'm not impressed with the sideways technical action. If it is a bottom, it's not the kind I buy. Kind I would buy is once we're taking out this and we have the RSI holding above 30. Okay. And also, having, if you, also talked about getting out of the precious metal, the gold shares, and they've taken some pretty good hits. Here's Newmont from where it was. Actually, they're holding up better than the gold. There's GDX, but they still look heavy to me. There's AG. Really, the shares are champions with this action I'm seeing. There's the semis, still possible failing rally after making a marginal new high where it diverged. Still think there's a chance we get a washout in semis. And Mag 7, I showed you those how negative the chart looked on the mags. We case down. Let's look at the mags one more time here. Yeah, they're not up. So there's the daily. Kind of taken out an uptrend line, but the feature to me is these gaps, this gap here. So that's not great action in the max. See that gap? Almost like an island top. Anyway, that still looks heavy to me. 62 to what was the high up here? 68. So 6. How about 58 to 56 for a potential target next year? This would be a preferred short. And let me wrap it with oil. Because earlier in the session, just like the other day, was threatening that breakout. And it still is. Okay, so here's a 4 hour. You can see it's tagging the line. So it's still threatening. They're holding it here, but over 58.50, that's a breakout. Next target area about 60 to 61. So everyone, I'll see you Friday. Happy New Year. Okay, Happy New Year. And the most important thing for traders, the most important word is next, right? No looking back now. Every trade is just another trade. So keep in mind next, because that's what trading is. One trade at a time. Yes, learn from your mistakes, repeat what you did in your successful trades. But the key is it's always next. Don't dwell. So going into 2026, everyone, Happy New Year. I hope it's a great year for you guys, not just in the markets, but in all areas of your life. Invite you to become part of our community here at TradeGateHub, sponsored by TradeView Markets. And looks like a lot of people are starting to come and they're posting. And this is where you can see my stuff. So you can see I was had some thoughts this morning. WTI with the charts there too. Gold. There's a 10-year that I just was talking about, and Dixie. And looking at this ratio between Bitcoin and gold. So just some of the things I'm looking at going into 2026. In 2026, I'm going to teach you guys a few new tricks. Adios and see you next